Hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver here. We'll talk about all things stocks, Forex, and cryptos for the week of October 12th through October 16th. We have the markets thinking to infinity and beyond. The optimism and hope of a new COVID stimulus package. Once again, we had Democrats pass a $2.2 trillion plan. The Republicans came to bat with a $1.6, now $1.8 trillion plan, and apparently that gap is still not an agreed upon amount. So it's still a stalemate in D.C. between Trump, Pelosi, politics. Are we going to see a package rolled out before the election November 3rd, the election day, the election week, the election month, all the drama that will ensue around the election? It really is a lot of political ammo being tossed around between the coronavirus vaccine, absentee ballots, now the COVID stimulus package round two. But yet the markets are just like, yeah, let's keep going. Why not? Might as well. The safety net is there. The Fed is dovish and accommodative, as are other central banks around the world. So we'll take a look at the markets today and we'll see what we're doing. Essentially, what I am doing is I am cautiously optimistic. I am very protective of all of my gains. I'm preparing for what might be around the corner, but the path of least resistance right now is bullish and maintains bullish. We're looking to get back to the highs from September on the SPY. We're looking to get back to the highs from September on the NASDAQ, and the Dow Jones is trying to get back to new highs as well as the Russell 2000. So again, path of least resistance remains bullish. And I'm not going to fight it. I'm not here calling tops. I think that the structure was there from September slide, but it doesn't seem to be the case. And we'll see where these highs are at. There's a ton of divergence. But again, let's get into the charts. We'll take a look at our stocks, Forex, and cryptos. So before we dive into the charts, understand there's risk in trading. Please and always trade with risk capital only. Do not trade with money you cannot afford to lose. If you're following me out there on social media, if you do me a quick favor, go ahead and click the like button on this video. If you're watching my weekly outlooks, if you've taken a look at my Keep It Seriously Simple video series on social media, Instagram at pulver.chris, Twitter at pulverchris, Facebook and YouTube, just type in my name, and that's my face. And that's what my Keep It Seriously Simple video series looks like. You can find that thumbnail on YouTube. So away we go. Let's get to the charts. So take a look-see here. This is the SPY, so the Exchange Traded Fund ETF that trades alongside the S&P 500. S&P futures is bullish again today. This is a weekly chart. Let's go to actually, no, to keep it on the weekly chart because the week just started. This is the high from September, end of August, early September, big slide in futures. You can see the high to low. This probably goes back for the last month. I talked about the significance in these videos, this weekly outlook series. I mean, watching this high, watching this low, and going into September, October, this is where volatility was going to drive traders crazy. Are we going to have enough bearishness to follow through to the downside? Or are we going to see the bulls just regain and continue to press higher despite the structure, despite the divergence? Path of least resistance is higher. Speaking of divergence, you can see here pretty clearly that if we take out the high, and we come up here and take out the high again, there is a ton of disagreement. So although it is very possible that the markets do make new highs, I don't believe there's a lot of momentum behind that. Okay. On the flip side, though, if there's not any interest to sell it, then the path of least resistance remains higher, and it will drift bullish and probably drift into irrational territory, and it'll be something maybe in and around the election that starts to put more of a top in place in the near term. So for right now, if the market is working itself into the hopes of a stimulus package, once again, a COVID package number 2, then we're going to continue to push higher. So S&P is grinding higher. Here is the DIA, or the Dow Jones ETF, grinding higher. There are the highs here from February, March of this year. The slide there from end of August, early September. It's not that far away. So again, you can see that even if we were to score a point for those bulls, taking out this high, retesting this high, there is not agreement with that, but we can still do it. So I'd say right now the bulls definitely have those highs in mind. There might be some dramatic profit taking. There might be some indecision. In fact, we might not even break the highs. And I'm sitting here, on a Monday, but by the end of the week, if we're not above this high and we're not below this low, then October still is a volatile month. So in my trading room, this week in trading, I'll be watching to see where price is at. Are we closing higher? Last week, the movers were pretty significant. Let me get the numbers there. I think the Dow was up over 3%. Yep, Dow Jones up over 3.27%, S&P 3.85%, Nasdaq 4.56%, and Bitcoin crossed above 11,000 again, almost a just shy of a 5% gain on the week. So again, pushing bullish and not trying to fight it. So there's your SPY, there's your SPY futures, there's your Dow Jones. Here is your Nasdaq. There's your slide from September, and this is a weekly chart. There's your sell-off there, late August, early September. And are we going to push higher? You can see that we have a gap to start the week. Are we going to gap higher and close the gap and actually end up with a bearish candlestick? Or is this just going to get higher, get higher, get higher, get higher, leave this gap available for the bears to come back and find it later with the disagreement and divergence that we see from the tops? So that's what we'll be looking for. And, watching the tone of the stock market will translate into the currency world. Are we going to see risk on trading, risk off trading? If the stock markets head higher, think about this. If the stock markets head higher, we will probably see a stronger Australian dollar, a stronger New Zealand dollar, a stronger CAD, possibly a stronger pound. This is going to be a really important week for the pound because of the October 15th Brexit deadline. I know that Boris Johnson is playing hardball. We don't know exactly what that's going to look like. Volatility was crazy on the pound pairs in September and has been kind of a day-by-day, some volatility, for better, for worse. But I'm wondering how much volatility get picked up this week. So a really easy strategy that I've helped traders with on pound crosses is just a simple London breakout. I'm going to use an example here. So if I go to the pound Aussie, here is a 1 hour chart. Now this strategy goes back many, many years from Market Traders Institute, and my own little rendition of it is this. I will use the 1 hour candle for the London session. So it's 8 a.m. UK time, 8 o'clock to 9 o'clock UK time, which translates right now for me in Eastern time for the US. It is a 3 a.m. to 4 a.m. candle. Now what I do is I just essentially straddle that candle and I wait for price to break above or below on a 5-minute chart. So it's going to look something like this. Today's trading is probably not that fantastic. Here is the 3 to 4 o'clock candle. So right here, I'll go ahead and draw a couple of lines. So just a really quick review. A lot of traders that see this almost every day in my trading room, there's a high and there's a low. Now, the good thing is that 3 to 4 o'clock candle has created enough structure for the morning that there really wasn't a trade until later on in the day. So there's your 3 to 4 o'clock move, indecision, indecision. I take this down to a 5-minute chart, and I look to see where price breaks higher or lower. So, you can see that there wasn't a ton of volatility, post the breakout. This was a high from 80.62 to a low of 80.16. That's around 45 pips. When it finally did make a 5-minute breakout here, I'll just tell you how I would have traded. I didn't trade this morning. I would have traded it this way. I would have taken the break right here on that 5-minute confirmation above the high. And as soon as we had price closing back in, I would have stopped out and taken a very small loss. From there, I wait. Okay, I will either enter in on a break to the downside or re-enter on a break to the upside. And so it looks like if I took one trade here, that'd be a small loss. I take another trade here. Now that I have some structure, this actually would be my stop loss. So this would be my stop area based on trade number 2, and trade number 2 is actually in profit for the morning by a few pips. Not a ton, maybe like 15, 20 pips. Let's find out. So if we take that breakout there, you're currently sitting around 17 to 18 pips of profit with a high side around 25. So if it was a small loss this morning, let's just measure that. So a small loss of around 10 to 12 pips, and trade number 2 was up to 25 to maybe 27 pips. I probably would have just taken break even on the day. Now, this doesn't look that interesting. You're like, well, 15 pips and 1 win, 1 loss. That's not that great. True, but you have to understand this strategy, when the pound pairs are showing a lot of volatility, this is a very easy way to trade and get some fantastic daily price action. So for example, if we see increased volatility on pound pairs this week because of a Brexit deadline or a European Union Brexit negotiation deadline, if the pound pairs start to go crazy, and I don't really know what direction they want to go. We've talked about there being pound strength based on what we saw back in September when the pound slid and then they've recovered. If this is going to be the bottom, then I am looking for something like this. This high right here, we could have the pounds breaking out to the upside to revisit these areas. And based on the structure, this could be a really nice bullish head and shoulders pattern. And if we break this level, I do see the pound Aussie going up towards 1.90. But rather than calling that and being directionally biased, look, If the pound comes up here and then shoots all the way down with news this week, guess what we can do? We can trade that London session breakout, be directionally neutral, and just take good trades based on daily volatility. So it's an easy way when the pound pairs are really moving to make some nice easy pips for the week. If you just stick with it, have good equity management, you trade this thing Monday through Friday, it tends to provide some decent pips through the week. I like this on the pound crosses because they're the most volatile pairs right now. And with this week, I'm going to see if this is actually on the calendar because I feel like it's not. And sure enough, we don't see anything concrete on the FX calendar for the pound crosses. But again, kind of day by day, I'll be watching to see what the pounds are doing. Easy way to trade it to be directionally neutral is to trade that London session breakout. But I like that little 5-minute structure. So you can see the 1 hour price action. You can trade the 5-minute confirmation above or below. Get some nice precision, go after 20 to 50 pips. And, again, what I like to do is get a trade in profit, eliminate risk. If it's going to be 40 to 50 pips, I'm really happy with those type of gains through the morning on a single currency pair. And if we have a lot of volatility and it's one direction, then you could set a break-even trade at +5, +10, and the market could literally run 100 to 200 pips on that day. So it's a pretty easy way if you're in the right direction, and it's just again following price action. You're in the right direction, you can have a very generous run for you on that morning. So anyway, that's what I'll be doing this week on pound pairs. Traders in my trading room are familiar with that strategy, so we'll be watching that through the week. Other news, I guess I just went back to that calendar for a second. It was a pretty quiet calendar overall. I did see some Aussie news this week. So we have Governor Lowe speaking on Wednesday evening. That's going to be Thursday's trading day. We have employment numbers out of Australia. Philly Fed unemployment claims again for the U.S. Core retail sales for the U.S. Last week, CAD on Friday. Unemployment was positive. We had a better than expected unemployment rate. We had better than expected job numbers. And I've said this for the last several months now. I mean, since coronavirus in March and April, coming back from lockdowns and coming back to new normal, all this stuff. I mean, numbers have been all over the place. You can see that the U.S. unemployment claims continue to stay steady near the high, 800,000s to 1 million plus. Meanwhile, you have companies that are doing major layoffs. Disney ended up, I believe, letting go of 28,000 employees. Airlines have cut 20+ thousand jobs. Look, there's still a lot of people out of work. Of the 25 million that were lost, I think we've recovered maybe 13 to 14 million of that. So there's still tons out there just in the U.S., and I'm sure it's like that globally as well. So numbers like this, I mean, great little pop here for the CAD, but I take all these numbers with a grain of salt right now. I think the major catalyst that's coming up, I mean, it's not that far away. We are like 20 days away from the U.S. election. And you consider this peripheral fuel with the absentee ballots, the hoax and the rigging of the election. You take a stimulus package round 2. You take a Supreme Court justice confirmation today and this week. A lot of things are happening right now that are going to cause volatility in the stock market. So like I said, right now the stock market refuses to go down. But I'm curious to see, is it just going to push things up towards those highs, fail at those highs? Are we going to get back down to the lows? Just watch price. Watch price, and it's like, look, I don't care what the market does during the open. If you're day trading, fine. But if you're looking to see where's my next big position, where's my next big trade, it's about the close of the day. So we might gap higher, close lower. We might gap lower, close higher. Volatility stays within that slide from September to October. All right. So until we break those highs, until we break those lows, that just to me is a lot of indecision. And again, you're day trading, possibly scalping, that's fine. But be very protective of profits. I'm very risk averse right now. I'm very conservative with a lot of margin and cash available to get into the markets where I see fit. And that's what I'm going to talk about here in a couple of currency pairs and setups. So let's go back to the charts really quickly. So futures, I'm just looking at everything on the dashboard. The SPY is up, futures is up. Take a look at Market Watch, everything is positive. The VIX is getting pushed down a little bit. So this is the volatility index. I'm still long on some of those calls for the VIXY. So I am in a $20 call, and that's currently upside down, but my expiration is November 20th. So hopefully in and around the election, we will see this VIXY pop to the upside, and that option will be nice and valuable for me. I'll take some profit on that. I'm also long the ETF with a pending order. I bought it around $20. I have another one in around $15. That's a pending buy, as well as $11.50. So I'm still going to look to buy the VIXY if I'm filled on some of these levels that go back into February. And all I'm really looking for is something like this as far as a trend line break. If we just simply break this structure I'm looking for the VIXY to head up back into, I mean, at this stage with me in around $20, if it heads up towards, 27.50, I'll make some money on that. Ideally, I'm trying to get this thing back in towards the $30, $35 to $40 on the VIXY would be fantastic. And I'm also looking at trading the VXX. Same thing here. Very similar structure. We have fresh lows on the VXX. We're coming down towards these, island gaps back in mid-February. If we break the structure here, that's what I'm watching. So if a trend line breaks, I would be looking for, in the money options, some call options, getting into higher highs, break the trend line structure. This could be a very quick rally like we had back in March. It may not be as violent and as aggressive over a 2 to 3 week cycle, but if this is something that just, pops up for a week, if this pops up in and around the election, enough for me to get into profit, I'll take those short-term gains on those instruments. Right? Currency pair wise, I am still holding strong on my Aussie Cad short. Let me go to the daily chart's pretty clean. Let's go to the weekly chart. I'll use some higher time frames here. So I'm still looking for a pullback on the Aussie Cad. So we have this big swing from low to high. All I'm looking for is a pullback. So I'm currently short from equal highs. I'm looking for the Aussie Cad to drop into some respective Fibonacci levels, and I'll take those profits from there. Even if it's this level, this is really where I'm looking at. 9,200 is a fantastic inefficiency in pocket on that weekly candle. So if I can see the Aussie Cad drop to 9,200, I'll be very happy with that. There's also a monthly target, monthly pivot sitting around 93.25 that hasn't been touched yet either. So between 93.25 and 9,200, I'm looking to take some profit as a seller on the Aussie Cad. And from there, I'm going to protect my sell trades because I do think this could be setting back up for a rally to the upside. So we could pull back into this pocket, pull back into this previous high, start building support back up, and then the Aussie Cad heads back up higher to range highs. And so we can take a sell trade now in Aussie Cad to the downside, a swing trade to the upside, and from there I would sell the Aussie Cad again for a more of a medium to long-term outlook for major resistance on 20-year highs. So I'm looking to make some pretty serious money on the Aussie Cad. It's just trying to cooperate, hopefully, to the downside first, build up some positions accordingly, and take this thing back up towards 102 and 103 at a later date. Aussie Swiss continues to be sideways. Longer term, I am looking for a bullish position. So I want to see if we can fall back into this area first, then start looking to acquire some positions for a bigger push to the upside. Right now, with everything being as sideways as it is now for the last couple of months, everything has been perfect for a range-bound trade. So selling highs, buying lows, selling highs, buying lows. I have a couple of strategies that do that for me with automation. I have an equalizer strategy. I have a perfect storm. It's called the active storm. It just ends up buying a lot of these lows, taking some profits at these halfway points, and just closing out for really consistent gains. That's been great. Having a pair like this do nothing for a couple of months. Those robots do very, very well and make hundreds of pips, which is a lot of fun. Aussie yen. Aussie yen is going to reflect the stock market. Are we going to end up poking these highs? We have a high right here, a high right here. If we somehow, make a new high, what I'm going to look at is my momentum. And if we make a new high in price and we have total disagreement here, I just don't fathom that we're going significantly higher. I would believe that this is a high, this is a high, this is a high. We're going to end up falling back down. Again, that would be major divergence on a high time frame. But for right now, we may not even break the high. This might be all this volatility from this high to low, and everything stays stuck inside of here. And the next big move is going to be, a breakout to the upside, breakout to the downside. We have to really see how the stock market plays out. The correlation between the S&P 500 and the Aussie yen is pretty tight. So whatever the markets are doing, if it stays bullish, this one's probably going to try to grind higher. If we have a big slide in the stock market, this one will start breaking structure and heading lower. So that's one way that you can trade a currency pair and get the same type of movement you would see out of the major indices like the S&P 500. Let's see here. Aussie New Zealand, we're at 108.51, just kind of waiting patiently on this one. Aussie dollar, currently looking to stay short on Aussie dollar, just back into these levels. So I want to see Aussie dollar head back into 6,800, maybe a little bit lower. I do have some buy levels I'm interested in down here, starting to look at some very small positions to buy, take this back up to higher highs. I would love to see this get back to like 8,000. Again, very similar to the Aussie Cad. Can we sell off first for some profits? Can we buy some small positions for a big push to the upside? So position number 1 for sell trade profits, position number 2 for buy profits, and then from there we look at position number 3. I would be selling this thing high 8,000, looking to come back down. So that would be just, again, that might be 6 to 12 months worth of planning on the Aussie dollar, but I think that's where we're headed. So I'm looking at, it's required a lot of patience. We'll probably see heightened volatility here in the next, maybe 2 to 4 weeks, and just be prepared for some quick movement on these Aussie pairs. CAD Swiss waiting patiently. Anything else here? Swiss yen, I'm looking for a U-turn to the downside. Euro Aussie totally sideways, a lot like the Aussie Swiss. Euro CAD is starting to head lower. I'm looking at Euro CAD to head down towards 5,000, maybe even 5,100, where we have these areas. I'd like to see if this can get down to that little inefficiency I have on the chart right there. So if we could see the Euro CAD, I'm looking to short this one. Euro CAD heading down. Again, there's a level that we've already been at around 5,100. If we find this inefficiency in pocket, that's around 48.75. So I do like short on the Euro CAD. The inverse of that would be the CAD Swiss, and I like long on the CAD Swiss, but I'm waiting for a trend line break and a little bit more confirmation to buy the CAD Swiss and hold it long term. But Euro CAD, I think we're going to slide into these previous lows. And it's going to be interesting. We either slide into these lows right here, create a bottom, and head right back up into a range, or we see this thing drop into our inefficiency, use that as support, and then head up higher towards 5,900 to 6,000. So we could have a nice sell trade on the EuroCAD right now, looking for major support around 48.50, 48.75, and then take this all the way back up towards 6,000. So some pretty big plans ahead. I'm just not forcing trades. I'm not building heavy positions. I'm taking little tiny trades. I like a few positions that I'm in: Aussie CAD, Euro Swiss, Dollar Swiss, and I'm building positions around those. But otherwise, it's really clean confirmation, good trading, and taking really small trade sizes. Euro Swiss, I've continued to exploit this 107.50 range. You can see this pretty cleanly right here. We're at 107.39 right now. It's going to be an important week for this currency pair because we have seen a ton of indecision right here. And I want to make sure that this week, if we bounce off these lows, we should be heading right back up into 10800. Now, I am looking to stay long on the Euro Swiss. Once we get above 108.40, 108.50, I'm going to stay long on this pair up into the 110.50, 11100 handle. Now, we could drop back down to equal lows. That is an option. We could also drop back down into this pocket. I still remain bullish on the Euro Swiss with a yearly pivot at 110.45 and structure and previous levels at 110.60. I'm going to stay bullish on the Euro Swiss. So this is a really important one to watch. I actually added another position. I've been telling traders this the last couple of months. 107.50 I added. I did not take profit last week because we did not hit 108 or higher. So I'm in at 107.50 and it came back down. I bought it again at 107.50. So as long as we stay here and we don't invalidate these lows, I'm going to stay with those short-term trades back up towards 10800 plus. If we get above 10800, 108.40, I want to see a daily candle closing higher and this thing pushing up into 110.50 and 11100. So that is my outlook on the Euro Swiss. Again, multiple months here of indecision. Hopefully we'll see some decent movement in our favor and just some good technical obedience on this currency pair. Pound pairs, I'm just going to stay away from the pound pairs other than that London session I talked about earlier. Yen, Euro Yen. Really indecisive. We had a nice little sell-off off the highs. I am wondering if we are going to break lower. Something like this, just a nice corrective move. Are we going to end up breaking lower on the Euro Yen? If this is the case, Euro Yen could break to the downside very easily. Swiss Yen could break to the downside very easily. Pound Yen could break to the downside very easily. But watch this structure. Okay, so we're pushing up, pulling back, pushing up, pulling back, pushing up, pulling back. If this structure turns where the bears get the edge, then I'm going to give the bears a chance to take this down towards fresh lows around 120. Euro New Zealand, I'm going to stay out of this one. Euro dollar, we're creeping back up towards the 11800 handle. Same thing, you can look for a nice little trend line break here on the euro dollar. If we break the trend line, there's a chance to sell it. If we don't break the trend line and this thing stays bullish, then we're going to try to revisit these highs at 120. So watch for this slow grind to the upside. If we hit 120 again, you can see that there's not much follow through with momentum. I would be looking to short that with some sell stops below or even a limit sell at 1.20 with a stop loss about 50 to 100 pips higher. But I think the safe play is if it taps 120, look for an indecision candle, sell the break of that, put a stop loss up above, and try to come back down to these lows. If we sell it at 120, stop area is nice and tight, go back down to previous lows. That's a pretty solid reward to risk ratio. You're also going back to these levels here, which is around 115. So if we sell it at 120, stop loss maybe 50 to 100 pips, and you're going after about a 400 to 500 pip run to the downside. Pound pairs, stick with that London session breakout. New Zealand Cad, this one should be completing a downward move. We have this low to low. This is a nice little crown pattern and pushing hopefully lower. If we score a point for those bulls around 85.50, 8,500, take your profit on that New Zealand Cad short. New Zealand Swiss, I'm looking for a longer term play on this one, similar to the Aussie Swiss. If we settle back in towards equal lows, previous lows, maybe a long trend line like so, just let it be range bound. If this breaks above 6,200, I think we're coming back up towards this high around 6,500. So I do have some small positions in that I've been holding actually since our March flash crash and April recovery. Just a couple of small positions on New Zealand Swiss, but I'm looking to add to it, and my add points would be equal lows, and then all the way down here at our flash crash level, even if this is a big range. If this is our new support becoming a resistance, we come all the way back down to major support. I'll still buy this and look for this thing to rally back up towards 62. So medium term, long term, I'm going to remain bullish on the New Zealand Swiss. New Zealand yen, this one is still sideways. New Zealand dollar, really ugly right now. I'm just going to leave this one alone. Dollar CAD continues to slide. We've been shorting this one since 33.25. This one's actually looking great. We should have lots of profit on this pair. We launched our Right Trader Max robot around 33.25 to the downside. This thing should be picking up some nice profits, and we're turning this thing off around 3050. So there's not too much further to go to the downside, and we could still break 3,000, but from our robot deployment, I'm looking to take profit right at these previous lows at 3,000. Dollar Swiss also coming back down. We're at 9089. This one's important because in the longer term, we still have levels around 8850. Which is right in here, and we have 8,600 right in here. I still love the fact that we have this amazing pocket on the weekly and daily chart at 93.50. So for whatever reason, this gives me a chance to make a low in price, and this is a divergent low. I'm going to look for that push back up into 93.50. Then we could have a pullback and another push higher. So I still think medium to long term, dollar Swiss is going to be a bullish setup. But right now, we might take out these lows, and if we do, if we take out the lows and the bears score a point, look at this. Do we score a point for the bears, and are we disagreeing with momentum? Because if we do, I think this is going to be where another bottom will form, and we'll start pushing back up into this high and that pocket around 93.50, which is why I will stay very conservative on my trade sizes, but I'm looking to stay bullish overall in my position. Okay, dollar yen. This one, I just have kind of this larger channel outlook, something like this. And let me draw another trend line. So I'm just looking at this kind of major corrective pattern on the dollar yen. We might come all the way back down to revisit the 101.50 lows from March. We might hit 100, which is major support. We might not go anywhere. We might have this equal low holding, equal high holding, and we have to wait and see what happens in and around the election. So this would be a straight line. We use a straight line. So if we went straight across, we are sideways. If we break and go higher, there's room to get back to 112 again. If we break and go lower, this channel remains intact. We come back to revisit 102, 101.50. Again, watch this low to see if we have a strong bottom and another wild move to the upside. I don't know. This is just my intuition, but I feel like we're going to have a lot of volatility in and around the yen pairs with the stock market, with the election. So this will probably be best if we do see some really high volatility on yen pairs. Robots will probably be my best friend, like trading aggressive trend robots that are just going with 1 minute price action, 5 minute price action, trading some active zones, and just kind of see where everything is stacking up. But right now it is super choppy, and I don't want to touch this pair at all. Anything else? We were talking about some exotic pairs recently. The peso, we didn't get a chance to sell it off the highs. We didn't come to equal highs, so we missed it. Krone is still sliding after we took about 9,000 pips of profit, so that's totally fine. I know some traders are looking for another move to the upside on the Krone. I just said be careful. We could be coming back to this area right here before the bulls actually have one more push to the upside. But if we come back down to these lows, just be careful. Don't force this trade. If you're trading confirmation, that's fine. If you took a trade last week and it closed lower, which it did, I would be stopped out of that trade for a small loss. So we took a great run on this one for like almost 10,000 pips. And I quit while I was ahead. I turned off the robot. I haven't traded it since. So I'm just kind of sitting back and waiting for another good setup. Okay, anything else? Dollar index. Let's look at the dollar index here. We still have room to get up into this pocket around 12,200. I'll look at the DXY. Same thing. So are we going to come back and revisit some of these lows? Is this a Flat pattern for the dollar to get stronger again. We have a nice pocket here on the DXY. We're coming back to revisit lows again. Is this a range on the dollar? I don't know. I did see some interesting reports on the dollar positioning. The net shorts on the dollar is actually very, very high. Typically, when that happens, we tend to see a reversal. So if overall the larger retail crowd is net short on the dollar, a lot of times that's looking for upward movement in the dollar. Well, again, we'll see. So I mean the overall structure here, we can come back into 2018 pockets, which I was prepared for on this fall originally. 2018 levels in here. That's not drawn very well at all, so let me redo that. So 2018 levels, that would be where I'm looking for major support on the dollar. So if we come back down into a flat pattern and then push one more time higher, right in there is a great retracement level. Again, that would be a near-term strength movement in the dollar, and then we'd have medium-term weakness in the dollar, right? If right now it's going to be near-term weakness in the dollar, then we might have near-term weakness and medium-term strength. But either way, I think technically the dollar is going to find a way to hit 12.2 on the US dollar and getting here around 96.0 on the DXY. All right. So like I said, kind of day by day in the stock market, I'm watching the SPY. Are we going to score a point for these highs? I'm watching. If we take out the high, that doesn't make me overly optimistic. It just means that all of my stocks that I've been in, all the gains that I'm seeing, I'm going to continue to protect my cash, continue to protect my profits. And just run with it. I'm not buying the SPY. I'm not buying dips. I mean, this does not interest me. This little 6% correction, 7% correction does not interest me. I want a 15, 20, 30% fall before I'm going to start getting heavy into Vanguard funds, buying the SPY, buying the Qs. I need a bigger correction than this. So, it's been a great year in stocks. I don't know what's going to happen over the next 4 weeks. We're probably going to deal with some crazy volatility. So again, it's probably as good a time as any to reassess your strategies. Make sure that what you do plan to use and trade with over the next couple of weeks, the next couple of months, that you are very focused and knowledgeable of how your strategies work. So if you are looking to scalp, if you are looking to swing trade, if you're looking to range trade, make sure you understand if it's an automated strategy or if you're just looking at your charts. I don't want to fight the markets. Yes, I've committed to a couple of positions. They're very small. I'm going to, in my own way, I'm going to fight the market on a couple of pairs like the Aussie Cad, the Aussie dollar, the Euro Swiss, the dollar Swiss. That's about it. But anything else, it's like if I'm looking to deploy some fresh robots, I want to know what they do, know exactly how they operate, what time frames are going to be great to use, and again, protect my profits. I'm not looking to overtrade if volatility around the election is plentiful. That's awesome, but we could also have a lot of messy trading. So I'm still going to trade small. I want to be active. I want to be watching everything closely. I'm looking at the stock market day by day. It's more important to me of what happens on the close. Okay, intraday price action for me, not that interesting unless I'm trading futures. If I'm trading futures intraday, there's some good liquidity. Fantastic. Let's buy the dips. Let's stay with this sentiment, hoping there's a stimulus package. Whatever. Oh, that's fine, but that's not how I trade. Okay, I trade stocks. I try to buy low. I try to hold. I've turned a lot of short-term profits in forex. I have some positions. I'm looking to deploy some robots and systems, and I know that how we have the stock market behave will translate and correlate into the forex pairs that I'm watching. So I'm watching yen pairs closely. This week I'm watching pound pairs closely because of that October 15th move. We could have some dollar movement, of course. And again, if the dollar is very weak, expect the Aussie and the New Zealand dollar to be quite strong. So CAD's actually been doing very well. That CAD slide from 3,300 down towards 3,100 is great. We're already in profit there. Let's see if they can head down towards 3,000. One quick note on Bitcoin. I saw that Square company came out last week and announced that they had $50 million bought on Bitcoin. We see a nice little run here. We're at 11,475 on Bitcoin. Can we take out this high from August around 12,500? If so, again, that trajectory looks pretty good. I'm seeing more and more information on gold and Bitcoin or cryptos in general as a nice hedge against the dollar. Speaking of gold, really quickly, let's go gold and silver. Gold is around 1924. I'd like to see one push lower on gold to around 1815 or this 1750 area. I'd be looking to get long here. If we have a breakout, back to around 18.15 and then a push higher, or back to these previous highs around 17.50 and then a push higher. My preference is actually to get filled on silver. So XAG, USD, we had a dip here around 21. I would love to see this. I'd love to see one more push to the downside on silver into this $20 handle. We get the $20, possibly down to $16. I am definitely buying silver. Position 1, position 2, and I'm going to be holding medium term, long term on silver. Again, if we see gold and silver dropping, it is comparing them to the dollar. So the precious metals might be dropping, which would weigh on a pair like the Aussie, and the dollar gets stronger in the near term. All right, so I'm watching the dollar, watching the Aussie because of that, watching the pound pairs this week. The yen is always a sentiment pair based on the stock market. So there's never a dull moment in the financial markets. Just make sure you're practicing good equity management. In fact, this week with my Keep It Seriously Simple video series, that's the video. It's going to be kind of round 2 of equity management, but it's going to be strategy specific equity management. So make sure you check out that video. And on that note, make sure you hit that like button for this video. Thanks for watching. I'll see you this week in the trading room. Let's have a great week, everybody. Talk to you soon. Bye.